What if you could test your trade ideas without having to put money on the line? See what your profit and loss would look like depending upon how a stock moves or time decay? Well, Robinhood now offers a simulated returns feature, which helps you do exactly that so you can plan ahead and avoid those costly surprises. In this video, I'm going to show you exactly where to access this tool, which assets you can use it on, why it matters in the first place, and then a full example walkthrough step by step showing you exactly where to access it in 2 different locations, whether you're using the normal Robinhood app or web app, and then the new Robinhood Legend platform as well. I think this simulated returns feature is a very nice step in the right direction because it's going to get people curious about the potential. And then when they get curious about the potential, they're going to question how things actually work. And especially when it comes to options trading, people don't really understand things like implied volatility and time decay and how those 2 things actually impact the contracts they're trading. And then we see a pretty big shift in people moving towards futures for the exact reason that you don't have to deal with that time decay that you have to deal with in options. And on futures, you do get a lot of leverage, whereas options, you can get incredible amounts of leverage and you don't have to start with a lot of money. But there are some major concerns and some major risks associated. As long as you know those risks going in, you can still put yourself in a very good position to be profitable. Now, the simulation feature on Robinhood is not perfect. We'll get into some of why in a second, but there's a couple of ways we can access it. You'll first off need either the Robinhood app on your phone, or you'll need to have access to the Robinhood web app platform. So if you type in robinhood.com on your computer, on your desktop, you'll come to a site that'll look very similar to the mobile app. You can get access to this feature on that site, but there's a more advanced aspect to that, which also takes place on the Robinhood Legend platform, which I'll show you guys how to access that on the desktop as well. This simulation tool only applies to option contracts. It currently does not simulate stock or ETF returns. Like if you were just to buy a stock or buy an ETF, this is primarily an options-based tool. And it makes sense because options are much more confusing. Whereas if you were to buy a stock, it's pretty black and white. If the stock goes up, I'm going to be up. If it goes down, I'm going to be down. So if you're ready to stop entering trades blind, let's get into it. Right now, I have pulled up SPY, the S&P 500 ETF. Now, I said ETFs and stocks you can't do this with. Well, you can't do this on this page. But what you need to go over to is the options, the Trade SPY options. If I click on Trade SPY options, you'll come up to a page that looks like this. I'm going to go out a week. And if I scroll down to around the money, I can look at this like 675 and I can click on this and I can see the bid, ask, all that stuff. Click on the plus sign and I can go ahead and potentially buy it. And then we have this expected profit and loss on the right-hand side. Now, this is going to tell you what the expected value of the contract or what the value of the contract will be at the expiration date. So the reason why this is cool, but it's not what we're looking for, is because this is not going to be like a curve. It's not black and white. It's not a perfect line like this because there's things like volatility, there's time decay. This is just showing you the value of what this contract would be at the expiration. And then if you be up or down, which is great as a start. But if you are someone who's more of an active trader, or if you're looking at like day trading or maybe even like short-term swing trading, this isn't really going to be super helpful because you probably aren't intending to hold this until the expiration. So it makes us ask that question then, well, what if I didn't hold it to the expiration? What would my value be? Because these aren't going to be completely accurate. So it's not inside of here. What you're going to have to do is click on this add to watch list if we are using the web app platform. Click on the add to watch list feature or the button right there. Then I'm going to go to view my watch list. I've got a couple things on my options watch list, but let's pull up that SPY call right here. So once I click on that from my watch list now, okay, now we see a different situation. So now we have pulled up this specific contract. The chart is showing us this specific contract, not just showing the S&P. It shows how this contract's been trading. We still see the expected profit and loss graph on the right, but that's again not the simulated returns. You'll have to go underneath the watch list position section. You'll see the current value. It gives you the current price. It's updating all that stuff. And then this plus or minus is just based off of after I click on the plus add to my watch list, what's so far happened to the contract. Has it gone up or down since I added it to my watch list? And it even tells you right here, average cost when added. I didn't buy it yet, but it's giving me kind of like a simulation already. But that's again, not the full simulation. This right here, the simulate my returns, is the button we want to click on. So now we get to this page, which is really simple, really cool. If you are a simple guy, and to be honest, that's kind of how I am, this might be a great place to start just to get a sense for how this stuff works. what we have on the bottom is the current price. So if I don't touch it, it's going to show me the current price of SPY, and it's going to move as SPY moves. And as SPY moves, this chart's going to potentially move, and it shows us that at the current price, if SPY was not to move, if wherever the current price is sitting at, based off of this graph, as time goes on, it can show you, look, 1:15 p.m. at the top, up right here where it says now. See, as I scroll across, we have 2:15 p.m., 4:15 p.m., and then it goes into next week. And it will show me, as I get closer to the expiration, if we're still at this price, what the contract will be potentially worth over time. So I can get a sense of what that time decay actually looks like in a graphical or a visual representation. But now if I was to either enter a price or use my keyboard to scroll across and move SPY to the upside. Now, if I put in 675 and say SPY goes to 675, well, now we have a different situation, because now if SPY was to get there or go to that price right now, our current value would be $103. And it shows us that we'd actually be positive on our contracts all the way until looks like around October 13th at 11:15. So a couple of days we'd be actually in the positive if we were to catapult to that price right now. So it gives us a better representation of this. And if we bring this further along, let's say to 685, we can now see that we're going to be profitable, meaning like this, even if it expires, this contract expires, we're still going to be up nearly $700 because I bought the contract for under $10. And now at 685, that would be $10 above the current strike price that we're looking at, which was 675. So now I'm going to have the contract will be worth at least $10 if it's at that price point, or it'll be worth $10 at that price point at the expiration date. But we still have a better understanding of what would happen if we don't get that continuation to the upside. We would be up a lot, but that starts to fade off quite a little bit as we get towards that expiration. Cool, so that's how we can do it here, but I do want to show you how you can do this on Robinhood Legend. So I pull up Robinhood Legend, and let's say that I wanted to go over to, let's just pull up SPY again. So I'll pull up SPY, I'll make this bigger so you guys can see this a bit better. I'll then need to click on either the bid or the ask, which will then pop open the contract right here so we can see the contract that I'm looking to trade, okay? We have the chart of SPY still on the left-hand side. I'm not gonna look at that too closely. And then what I can do is click on the simulated returns. So it has the option chain right here and then simulated returns. Again, this is on the Robinhood Legend platform. This is a bit cooler. It's a bit cooler, I'll tell you that. So what we can do, this gives us some more customizations. We have a slider right here that allows us to change the date and the time. So I can bring this around and bring this across, okay? Now this is a December, looks like December 19th. So this is like multiple weeks out in the distance. So that's for this specific contract that I just clicked on. So I can move it. Right now it's 70 DTE, days to expiration. So I can move the slider and it can show me where my price or how these graphs or lines are going to look if I change that day to expiration. The other part here is we can add or we can move the implied of volatility. So I can move that down to 0, which makes it more of a straight line, just simple, but that's not how the markets actually trade. And I can move that up. So if we have more volatility, more crazes in the markets, here's what this graph would start to look like. Now I can zoom the graph in, zoom the graph out, but it's really, really cool because I get this visual representation of how this contract is going to trade. Obviously, I don't know what the implied volatility is going to be tomorrow. I can't guarantee that, but based off of what it currently is right now, we can create this graph and get a better picture and visualization of what this contract will be worth at what price points. So based on price right now, we're sitting right here. If I buy this contract, I'm essentially even. So now let's say that we want to estimate that, okay, we're looking for a move of SPY to go to $700 in the next 2 to 3 weeks. Well, I can bring the slider across like 2 to 3 weeks. Let's bring this out to like the end of October or November from when I'm filming the video. And I can now see where my break-even point would be. So my break-even would now be at around 680, which the current price of SPY was like 673. So, or 672.50 as I'm speaking right now. So SPY would need to move approximately $7.50 up in my direction for me to stay break even 3 weeks out. So I now have a sense, okay, if SPY is going to move up, it needs to move up a couple dollars per week for me to stay flat on the position. But if I want to make money on the position, this will have to move more per week or more in a shorter period of time for me to have value. So let's say that now SPY moves to $720 in that next couple of weeks. Well, I can go and say, okay, if I'm estimating that SPY will get there in the next couple of weeks, what would my current or my estimated P&L be on this position? So if I go out to that 720 area, that puts me up in the top left. We are now going to be up 175% and $3,220. That's where that estimated P&L is up in the top left based on the parameters I have set. Again, do we know the implied volatility will be the exact same? No, but we can still get a good sense and a good estimate by messing around with these numbers, and we can put ourselves in the ballpark. Now, as of right now, if you were to go to more of an advanced option strategy, something like a call credit spread, we can't do this. We can't do this exact same thing because it's a lot more complex, a lot more moving pieces. So we can only simulate right now on those single option contracts, but we can still see that estimated by expiration profit and loss graph, which we get right here. If we were to go to the option builder and pull up a call credit spread or a call debit spread. So for example, click on SPY, go to the debit spread, pick a random one right here, click on the plus, and then it will give me a sense, okay, like here's what the current graph would be looking like. If I was to scroll down to something that was a little bit more like in the ballpark, let's say I went to this one, click on that, click on the plus sign, we can get a better sense. Price down here, we're going to be full loss. Price up here, we get the full expected profit. That's currently the limitations of this. Be careful because, again, it's not perfect because that implied volatility, we can't guarantee that. There's a lot of moving parts and options, but I'm very excited that they released something like this. Not that it really matters to me that much, but for people who are getting into the option game and who are going to be curious, want to click on that simulate returns, see that, and then be like, oh, wow, options don't just move one-to-one. There's more involved here. I should be better prepared. And then you can set it up to risk a certain amount for that reward, but at least you have your expectations managed going in a bit better. If it was helpful, leave a like, drop any comments you have, any questions you got down there, and I will read all of those. Thanks so much for watching, guys. I will see you in the next one.